Hello and welcome to the UK Equities Week Ahead for March the 3rd. So we're going to kick straight off with Greggs, who will be reporting full year results on Tuesday. Now we can see there that the share price slumped quite considerably in January after it warned of higher costs this year and slowing sales growth. So in January, we had a trading update from Greggs, and they said that total sales were up 11.3% to reach a record of over £2 billion for 2024. However, like-for-like sales growth was 5.5%. Now, that was below the 6.3% that was expected. And like-for-like sales growth for the final quarter rose just 2.5%. That was well below the 5% expected. 5% from Q3 and well down from the 9.4% in Q4 2023. So we're really seeing that slowdown in sales growth coming through. Now that's been because of weaker consumer confidence, which has been impacting footfall and also spending. Now, the outlook for 2025, expecting to see costs increase. This comes down to particularly employment costs, staffing costs, owing to the increase in national insurance that was announced, or contributions that was announced in the budget in October. However, that is expected to be a little bit offset by stronger wages, which could help support consumer spending. Now, pre-tax profit is expected to come in at 12%. Do keep an eye on sort of any commentary regarding store expansion. That's another area of growth that will give us some clues over to how upbeat Greggs are for the coming year. Now, just having a look at the chart here, we can see that after that sell-off in January, we're seeing the price just consolidate slightly between that 2,250 level and the 2,000 level. Now, sellers are going to be looking with the RSI below 50 are being supported here. Break below that 2,000 level could really open the door to a much steeper decline, obviously bringing the 1,600, 1,700 low. This was a level that we saw sort of, around the June 2022, but we are trading here at, levels that we've not seen since 2022. So all that increase that we saw across the end of 2023 and 2024 has been given up. So if we do find that the support holds at, just try and get this sorted. If we do find that that support holds at the 2,000 level on the upside, we can get a rise above the 2,250, then that could spur greater increases towards the 2,600 level. That's jump that we'd be looking for on the upside. So I think, we would need significantly good news in order for that to occur. Given the fact that we're trading below the moving averages as well, it does support potentially a break to the downside. So then we'll also be looking at ITV, who will be releasing results this week. Now, ITV announced its Q3 results and the share price fell sharply. This is this sell-off that we can see here, fell to its lowest level since March 2024, and that's when revenue slowed 8% to 2.74 billion. ITV Studios acted as a big drag with revenue at 1.2 billion. That was basically down 299 million, and that was put down to the US writers' strike. But unfortunately, the outlook doesn't look too much more upbeat. Expected full year revenue to be in the low mid single digits. Also, investors will be hoping, I think, for a little bit more of an upbeat outlook, given that there aren't any major disturbances expected this year as far as strikes are concerned, and they do have a good slate for content. Advertising has been more downbeat. In Q4, it's expected to be around 0.6% lower than last year. Also looking to save around 20 million in pounds in costs, and that's due to this slower advertising that we're seeing. Now, interestingly, if we just have a look at the share price here, it is trading in a relatively range-bound pattern here, caught on the upside by 78.30 and on the downside by just under 70, so just 69.85. We're trading below the 200 SMA. I mean, the RSI is also below 50. So I guess, if we're looking to a breakout, it might be towards the downside if we get some weakness in these results. And below that 69, sort of 70 level could open the door to this level here, which is 66. And that's below the gap up that we saw in November. Below here, obviously, then that brings 61.50 back into focus. Upbeat news could see a rise above the 50 SMA there at 73.10, bringing the 200 SMA at 75 into focus ahead of that 78.10. Need a rise above there, 78.10, to get a higher high and to see the bulls really take control. So then just finally, Reckitt Benckiser, sorry. Here we go. Still in an uptrend. They're going to be reporting full year results on March the 6th. Basically, this comes as the share price continues to recover from that all-time low that we saw in July last year. Now, basically, we've seen this recovery in the share price as the turnaround strategy, including sort of a new corporate structure and cost-cutting program, has really helped to rebuild confidence. And basically, this will be sort of a good checkup as to how volume and price growth across the group is holding up. Big challenge has been the slowdown in volumes and pricing. So that's what we're going to be focusing on with nutrition, a source of concern given the high profile legal case at the moment. Now, expectations are for sales for the year to fall 3% to 14.7 billion, and operating profits are expected to ease 2% to 3.3 billion, down 2% from 2023. Operating margins are expected to be around 23%. If we just do a comparison back to 2016, operation margins were closer to 29%. So that does give us some clues as to the how we're holding up there. As far as the chart is concerned, just again, near term, we have seen a slight consolidation pattern within this rising channel as we've recovered from that low. Any sense of encouraging news will be, or upbeat earnings will look to rise above that 53.45 level. And then above there, be looking for 5,600 as the next level. That's also going to be sort of around the upper band of that rising channel. On the downside, if you see a fall below 51.15, that's going to create a lower low, and it could also see a test of that lower band of the rising channel there at just over £50, so 50.70. As far as I said, that could create a lower low and could create a further deeper sell-off towards the 200 SMA down at 46.50. So I hope you've liked everything that you've seen today. And if you've got any questions, please do reach out. Otherwise, we'll see you next week.